Hello and welcome to Big Deal. I'm on the sidelines of the IVCA summit in New Delhi and speaking to a whole host of investors. Let me welcome on the show Rahul Bhasin of Bearing Private Equity Partners. Rahul, always a pleasure to speak to you. Now, my first question. Lots of events have happened globally as well as in India. Lots of big events are likely to come up, like elections. We are dealing with inflationary scenario. Central bank movements is something that is on top of the mind for the liquidity flush to come in back to India as well. And on the other hand, there is geopolitical tension. Amidst all this, how do you see the investment sentiment for India at the moment?
You know, strangely, if one looks at the fact that how much debt is out there, the debt being replaced, the cost of capital going up, I think one of the basic assumptions that one has to make is that all asset prices would have to derate, right? All asset prices, regardless of where they are in the world, they would have to settle at a lower, the clearing price has to be lower.
Yes.
Having said that, if you look at all of the drivers of economic growth, productivity, the adoption of technology, returns, these kinds of things, India is in a real sweet spot. Right? One might argue that energy prices might shoot up and India would have a disadvantage there. Yes, on the margin. But even if that were the case, even if I think that India would still overall be in a very, very sweet spot.
Yes.
The entire digital architecture that we have in our country in terms of the governance architecture and the sort of payments architecture and actually is increasing our productivity and efficiency of the economy dramatically.
Yes.
The architecture that we've put in place in terms of physical infrastructure, road, rail, air, etc., is increasing our physical productivity significantly. There is a lot of scope also to increase our productivity by clearing the legal infrastructure, which I think is still weak, and that's, according to me, a big opportunity still ahead of us.
Yes.
That the entire way in which the legal process works, the speed, efficacy of that whole thing, and I just think that it's under-resourced and under-invested in. And using technology today, again, I think there's an opportunity for us to leapfrog. Right? But other than for that, if you look at all of the different components, I think we are really in a very good place.
Right.
And if you look at our jobs ultimately are to invest in franchises which acquire more customers, can become more productive, and can expand the value addition that they provide to their franchises.
Right.
And all of those, the facilitating environment is better than it has ever been.
Right. So if India is in a sweet spot, Rahul, but of course we are not immune to several factors globally. Has your investment strategy changed or set to change, basing yourself on several factors which are developing right now?
Look, any sensible investment philosophy at its heart, if you understand what is driving your returns and how you earn it and what are the risks that you need to manage, has to be consistent for you to be successful. The opportunity set keeps evolving, and where you focus on that opportunity set matrix has to keep evolving, and we bear that in mind, that you can't make money from the same theme that you did 3 years ago, 5 years ago, 10 years ago. You have to look at where the value creation will be the most, and where the growth opportunities are the most, and where your price value risk equations are the most favorable, right?
Yeah.
And depending on what fads are ruling at that point in time, this keeps evolving. So if something is excessively popular, or it's something that is talked about every day, I mean, I think one easy check is that if everyone is talking about something, it's probably too late.
So you have a very flexible kind of a portfolio, Rahul, and you also have diversification in the kind of investments you can do, whether it's small cap, large cap, or even VC funding, whether private or public, and in terms of buyouts or minority.
That's
so
right.
Given all that, what kind of investment and which sector is looking most attractive and conducive at this point? And also, given that valuations have seen a huge amount of flare-up as well and volatility.
I think what's very clear to us that public markets are a difficult place to invest in these days, right? And we go through different phases. We find very little margin of safety across the entire public market spectrum. On the private side, what we have found is that there is a lot of capital chasing opportunities above a certain size.
Yes.
Maybe above a 300-400 crore size of an investment. We find that the amount of capital there and the hurdle rates of returns seem to suggest that that's still very crowded at this particular point in time.
Right.
But below that kind of hurdle, I think right from the early stage to that point, I think the opportunity set is immense. Now, these are my comments as of this moment. 6 months later, that might change completely. And from what I've noticed over the last quarter century or so, is that this is very dynamic. It keeps evolving. It keeps changing. And one has to adjust one's where one engages in the value chain and at the stage of the organization to be able to generate a consistent alpha.
But what about the equity market transactions, the public market listed companies? Given the volatility as well as the valuations, really going up in the interim, have you invested or has your focus been on more exits?
On the public side, definitely it's been much more on the exits part of it. Certain parts of the value chain also we're exiting. But I think that for most of the value chain, our pace of exits and new investments is roughly the same.
Okay, and what about the startup world, which is facing a funding winter right now? Are you still finding attractive companies at lower valuations because they need liquidity, and are you spending time there?
So here's how I would put it. I don't think there's any funding winter at all. I think that what had happened in between was that we had a bubble, and every business which came out and tried to raise capital was able to raise capital.
Right.
Now, historically speaking, if you look at it, typically 1 in 200 was able to raise capital. Right? But now we reached a situation where everything was being able, every opportunity, every sort of configuration, every business plan was able to raise capital. And a lot of it, to my mind, was simply unviable, right? I think a lot of that segment is facing the inability to raise a follow-on round and follow-on capital. But I think any economically viable franchise, it doesn't mean that it has to necessarily be profit-making.
Yes.
It is simply that it has, its unit economics is positive.
Yes.
And you can see that, once there is certain size and scale, the operating leverage will make that business profitable. I don't see the problem for any of these businesses to raise capital. There's plenty of capital available.
And at a certain price, I would say.
Yes.
And unfortunately, their previous round was much higher in terms of valuations. But what area is looking attractive? What are the themes you think you're more interested in?
Look, for someone in our business, the best opportunities always come where the rate of change is highest, right? So whatever is changing the quickest, where the enabling infrastructure has changed, so therefore there's a lot of businesses in the financial services space because the enabling infrastructure is now different, which will again, give a huge opportunity. In the entire energy ecosystem, there is your enabling architecture and technology today allows you to move towards the EV ecosystem.
Yes.
Again, big opportunity. The entire global warming thing puts a lot of pressure in terms of energy efficiency and not wasting energy. So energy efficiency as a theme is going to be a big theme, and there's going to be a lot of change in that whole ecosystem. There is a lot of now understanding of pollution and sustainability being a big theme. So the circular economy is again going to cause a lot of disruption, and companies, businesses, they're going to cause disruption and going to give a lot of opportunity. In terms of even agriculture, there has been a lot of stress on agriculture. There is a lot of technology innovations now. How we use fertilizer, how we grow crops, how we manage our entire agriculture value chain is seeing a lot of technological disruption around the world. Again, that leads to a lot of opportunities for us. Right? Space tech, again, a lot of opportunities because of lowering of unit costs, unit economics there,
Yes.
and the ability to, much better cameras, much faster processing speeds, much more efficient transmission technologies, all allow you a whole host of opportunities which never existed.
Exactly.
I think what is wondrous now from my profession, and I'm probably more excited than I've ever been,
Yeah.
is simply the cumulative rate of change across the board.
Of course,
Right?
of course.
And every time there's change, I have an opportunity.
So we are closer to the future, and especially after the COVID transition that we have seen. Most of these sectors that you spoke about are all sectors of the future, Rahul. And I'm happy that you added the space tech bit also, which has become a very hot talking point very recently since our moon mission. But any challenges that you foresee in the investment climate in the near future?
See, the normal cyclicality will be there, right? And geopolitics can create shocks every now and then. But I think the biggest sort of the biggest thing which will haunt the world and the investment world
Yes.
is the sheer amounts of debt that so many countries around the world have. Whether it's the United States of America or UK or New Zealand or Australia or China or Japan or all of the southern European countries, that debt. Now, people have to look at the fact that with interest rates having gone up,
Yes.
the bond portfolios or the equivalent of the SLR portfolios of banks around the world have actually led to reduction in balance sheet sizes of banks.
Yes.
It has led to reduction in their ability to lend, therefore implicitly contracting money supply,
Yes.
right, in some form or fashion.
Yes.
And this will lead to people not having access to funds, not being able to refinance themselves. Government balance sheets will have a lot of pressure because if you just look at the United States of America,
Yes.
if you look at them replacing their government bonds at 5%, what was earlier 1%, that increase in the
Yes.
cost of interest cost in the US itself within 3 years will be over $1 trillion a year, right?
Yes.
Now the problem is that what will that lead to? That will lead to higher taxation inevitably because governments have to match their books.
Yes.
Or it'll lead to, again, inflationary pressures.
Yes.
And I have a feeling both are here to stay.
Okay, and therefore the turn of the interest rate cycle that everybody is really pinning their hopes on, that could be more further than we think.
I think that's a little bit of wishful thinking.
Okay, you said it, Rahul. Thank you so much for sharing your thoughts on my show. Always a pleasure speaking to you. Thank you so much.
Thank you for talking to me.
All right, with that, we'll slip into a short breather, but come back for more from the sidelines of the IVCA Summit.
It's the festive season.